Welcome back, everyone. Thank you so much for staying with Politics Tonight. This evening, we're discussing CBN's battle to save the Naira, and I've been speaking with Kelvin Emmanuel, an economist and director of Obsidian at China, Nigeria, as our guest for tonight. Mr. Kelvin, thank you so much for staying with Politics Tonight. Let's move on with this conversation, and we're going back to one of the positions you raised earlier about the central bank. The CBN will hold its first monetary policy meeting since July on February 26 and is expected to raise interest rates sharply from current levels of 18.75%. What are your expectations?
Well, there are speculations. For example, some people have indicated that they expect the central bank, MPC, to raise it by 500 basis points or 5%. For our viewers, I'll say 100 basis points in central bank language is basically 1%, so it's basically 100 times, 100 divided by this thing, 100. So 500 divided by 100 will give you 5%. So from 18.75%, typically the Central Bank of Nigeria, MPC, has basically maintained what they call an inflation to interest yield curve of 400 basis points of 4%, which means that if headline inflation is at 28.9%, which is currently at, then the MPR is supposed to be at anywhere around 24.9%. So the question now is the MPC really going to raise it by 500 basis points? So you have like a quagmire. You have a situation where if you do, you're damned. If you don't do, you're damned. If they raise the MPR by 500 basis points, commercial lending rates will go up to about 37 or 38%. If you don't raise it, you're going to continue to see capital flight from Naira-denominated assets to dollar-denominated assets because of like an erosion of value when you keep your money in Naira, and because you have a negative return on yield. So it's a difficult mix. I don't think the MPC will be that aggressive to raise the MPR by 5% because, in my opinion, I don't think inflation is responding very well to interest rate hike and monetary tightening. I think you have a problem with money supply, and the fact that quantitative easing from Ways and Means in 2019 all through to 2022, increased the money supply and, caused like an imbalance in terms of outputs to demand, to supply in the market. You also have the fiscal side of the equation. You have the fact that in terms of energy, in terms of the lack of distribution and decentralization of the transportation system, you have the fact that the output for food has dropped drastically. Rice prices, you see, has gone up because some parts of the paddy used for processing rice in Nigeria, for example, are smuggled through the borders in the north. This is the truth. If you speak with millers and refund, they will tell you that this is the hard reality on the ground. So you have to increase output for food. And for you to increase output, you have to go back to issues like backwardly integrating muriate of potash, phosphates to blend your own fertilizer in country so that you're not exposed to FX shocks from importing phosphates from Morocco or from importing muriate of potash from Canada, Russia, and Ukraine, which are the highest suppliers or producers of muriate of potash around the world. These are the ingredients along ammonium nitrate that you need. Fertilizer is very important. So, for example, I'll tell you categorically that I've not seen much bites or much, plan of action from the Minister of Agriculture on how his roadmap is for increasing the output for food, for grains and non-grains, to shock the market in terms of food inflation. For example, in Lagos, food inflation is nearly 45%. It's insane. So for you to have the shocks to the market and help the monetary authority to make decisions that doesn't push everybody to the edge and doesn't make them or incentivize them to want to raise MPR by 500 basis points, you need the monetary fiscal authorities to complement it. And two important areas that actually forms the energy inflation basket in Nigeria is energy and food. We're making progress on the energy side, and like I mentioned, the only threat I see to the progress we're making on energy is actually the feedstock for the commercial refinery in Nigeria. For the food side, I haven't seen much progress.
All right then. So before we move on to other issues, there are those advocating for the amendment of the Foreign Exchange Act. Do you subscribe to these? And if you do, what wonders can this perform?
I think it's very important to amend the Foreign Exchange Act. I also think it's very important to amend the CBN Act of 2007. It's long overdue. I think there has to be, the Minister of Finance has promised that the government will align with the 15% of real revenues for the previous accounting year for ways and means, which is very good because you could see that the previous government abused ways and means so much and got us to where we are today. I think the foreign exchange markets and access to FX needs to be liberalized to other players apart from the banks. The banks should not only be the primary dealers in the foreign exchange markets in Nigeria. I think this falls under the purview of the central bank and the chairman, House and Senate committees on banking, insurance, and financial services. And I always like calling Mr. Senator Distinguished Tukumba Abiru, who is the chairman, Senate Committee on Banking, Insurance, and Financial Services, because he was the MD of a bank, so he knows the implications of not amending the CBN Act of 2007 and not liberalizing and decentralizing the foreign exchange markets. And on the central bank, for example, not enforcing sections 20B, I think, that says that nobody in Nigeria is allowed to use a foreign currency as a legal tender. So for example, it's a good step that the Central Bank of Nigeria is working with the security agencies to enforce sections 20B that is seeking to avoid people dollarizing the economy by pricing their goods and services in USD. But overall, I think you need to introduce more players, liberalize the market, align the NAFEM rates with the black market rates, and bring in people outside of the current basket of primary dealers you have.
So let's talk about the rising cost of goods and services in the country. The CBN governor, Mr. Cardoso, has assured Nigerians that the country's inflation rates will decline despite the growing cost of food and other necessities. How do you react to this?
His targets are ambitious. I think he projected 21.6%. I think his targets are ambitious, especially considering, like I said earlier, I haven't seen like a firm plan for how the government intends to increase the output of production for food. Listen, for food, you have two different layers. You have primary products from Nigeria, then you have manufactured goods that is exposed to importing raw materials that are usually enterprise or durable goods for consumer manufacturers to process. That is a part that contributes heavily to inflation, because when you come to this side, you now have issues like the manufacturing companies, they rely on the banks to be able to open letters of credit or LC for them. And these banks have been constrained on opening LC because the central bank is unable to meet up their obligations for forwards, and you have a situation where they have to go to the black market to source for dollar to import LC. And these companies usually benchmark their FX rate at 300 naira above the black market rate. So for example, if the black market rate today is 1,450, a manufacturing company would typically place its benchmark rate at 1,750. That's the rate at which it's pricing its goods and services. So on the other side, on the Nigerian side, you have a situation where there is too much focus on roads and trucks as a way to transport or move goods around Nigeria. There's too much focus because you have the fact that there's wear and tear on the roads, there are bad roads, diesel prices are very high because, Dangote's products have not hit the markets, and we have all these shocks from importing diesel into Nigeria. And there is no train or rail system around Nigeria, both for horizontal and vertical rail network, for really moving cargoes. It's very strange that you have a country of over 200 million people, and a major means for transportation for goods and services is actually road. You don't have a lot of rail infrastructure. And then even when you want to look at rail, the question you have to ask is, does Nigeria actually produce steel? Because steel is like a major part of rail track construction. That does Nigeria produce steel? How are you going to import steel from Russia or India or China at these exchange rates? If you look at the EPC for FID for quite a number, gas transmission pipes that rely on steel and rail projects. You see that they've installed because of getting FX in their APC for, meeting up with their project implementation schedule. So how are you going to get the steel that you need to construct rail to decentralize the transportation system to reduce the cost of moving food around Nigeria, cost of moving energy around Nigeria? Fuel price is cheapest in Lagos because Lagos has Tinkan, where you bring in petroleum white transportation fuels. But fuel prices are way higher in Bayelsa, in Abia, in Delta, in Kano, in Gausu, because you have to use trucks to transport fuel from Lagos, from Calabar, from Port Harcourt, to all these parts of Nigeria. Now, if you have a functioning rail network and you have a functioning cargo network, you will be able to move a lot of these energy and food products cheaper, faster, without a lot of encumbrances they have, because there's also the issue of harassment that these truck drivers have on the road, and they have a standard unofficial tax that they pay, a black tax that they pay on the road for moving their goods around Nigeria. So these are the issues that the government needs to focus on. We can talk about the economics of the central bank and all the issues about the monetary authorities that we've discussed extensively on this show, but the government needs to focus on these issues, on how to deleverage the cost of energy and deleverage the cost of food, the cost of land development, the fact that we rely on smallholder farmers as against mechanized agriculture and smart agriculture, and the fact that we import 70% of the component for blending fertilizer, which is a major component for food production, the variety of seeds that we plant. These are the issues that we have to focus on as we begin to talk about the conversation on ramping up on the fiscal side and how it affects Nigerians and inflation.
All right. So let me get your final reaction for tonight. There are reports quoting the Minister of Finance and coordinating Minister of Economy about talks with the World Bank to secure a lifeline of between $1 billion and $1.5 billion from the World Bank to rescue the Naira. Do you subscribe to this move?
I think I'm not very optimistic. I think they're window dressing because the $1 billion is not going to move the needle in terms of the FX rates. I'll tell you categorically that I'm not very happy with the Project Gazelle deal, the foreign sale agreement for 164.25 million barrels of crude oil in exchange for $30.4 billion in cash that was done recently. I'll tell you categorically, I'm not happy with the economics of that deal. That deal actually shortchanges Nigerians. We need to talk about how to do business transformation for NNPC and get NNPC to go to the markets, do book building, go to the markets, do some kind of IPO, raise money for capital projects, and also raise money that will, in a way, help to shore up the FX balance sheets that we have as a country. We need to talk about fundamental reforms on how to move government-owned enterprises from NNPC to Ministry of Finance Incorporated to better manage the revenue flows that the government gets in FX. We need to sit down and do an assessment of positive plus and minus in terms of our balance sheet, for sale agreements, all the encumbrances and debts that the government has on crude oil and gas. We need to talk about export pipelines for gas and how much revenue that can bring to Nigeria. We need to talk about the regulation of gas prices. I'm not particularly enthused by the World Bank having a meeting with the finance minister and structuring a possible $1 billion or $1.5 billion of loan. It's not going to move the needle. We need to talk about structural reforms and how the fiscal authorities need to ramp up. I don't want to go to the issue of fiscal federalism because it's a different conversation altogether, and I believe that is the real elephant in the room. But NNPC is key to the problems that we're facing and how we can solve them. And until we start having the difficult conversations that everybody likes to shy away from and talk about how to transform NNPC, the business model NNPC has, in my opinion, I'll tell you that there are lines of business NNPC currently has that it shouldn't be in. And there are lines of business that NNPC should go in that it's not currently doing or considering. So Russia is facing the issue it's facing, and the oil and gas sector in Russia is the saving grace for the Russian economy.
Mr. Kelvin, thank you so much for joining us on Politics Tonight. It's always a pleasure speaking with you. I must say a very big thank you for sparing some time for us tonight. Thank you so much. Mr. Kelvin is an economist and director